I think the key message is that liquidity is the most important thing. If you haven't realized it by now, I mean, this is the fact. You've got to understand liquidity movements. That's really what's driving markets. And generally what is behind this liquidity expansion, certainly in the current period, are central banks and ultimately governments. Governments need to fund themselves. The fact that we've got aging populations with very generous welfare systems, and we've got a defense budget which is likely growing, means that the ability to tax populations is de minimis, and therefore you've got to start turning to the financial markets to fund all this government spending. And the only thing you can do is ultimately to print money. And that is what is monetary inflation. That is coming to a high street near you, and you've got to invest accordingly. And therefore watch liquidity, but start to move away from this traditional 60-40 asset allocation, reduce traditional bond exposure, and start thinking of dedicated monetary inflation